Hello everyone, I'm Anda Kanya, lead editor at The Papers, and joining me now is Jakob Pethick, the CCO of Youlend, and together we are about to take a journey far beyond traditional financing. So dear SMEs, say hello to new financing opportunities. So what are the current challenges and opportunities in SME financing?
So SMEs today need financing to start, run and grow their business. When we speak with small businesses, the challenges we often hear about are lack of access to finance and difficult application processes. So the lack of access is typically due to the fact that traditional providers may look at backwards-looking data that is good for the businesses we used to see in the 80s and the 90s, but not so suitable for modern young businesses that are high growth, where you need to take a forward-looking view. The other challenge we often hear about is the difficulty of applying for financing at the time where you need it. Traditional finance providers have lengthy application processes that can take days, whereas modern businesses expect financing today. And that means that around 1/3 of small businesses who fail tend to fail because of lack of access to cash or funding. Now, that's created a big opportunity for technology companies and challengers to bring financial services into a new era. What we're seeing is that companies that used to not offer financing are beginning to do so. You see e-commerce platforms like Shopify, Amazon, eBay offering financing to small businesses, and often doing so with a deeper understanding of the business than what a pure play financial provider could have. So I think we're seeing the movement from these applications that may do something specific for one vertical, e-commerce, food delivery, restaurant-specific software, into financial services, and trying to bridge this gap for small businesses.
What are the common financing instruments these days?
So for small businesses, they have a plethora of options available to them. You have traditional loans where you have fixed repayments, you have credit cards they can be using. You also have forms of revenue-based financing where merchants pay back as they make sales, and you get a much closer alignment between the lenders and the small businesses. If the small businesses do well, the lenders do well. If the small businesses don't do so well, the lenders don't do so well. And that sort of alignment of incentives is quite unique.
And when we look at the onboarding process, we all know that it's not exactly an easy journey. So how can we make that journey seamless when it comes to financing for SMEs?
So I think the really exciting thing we're seeing around onboarding innovation at the moment is that companies who understand small businesses really well are beginning to offer financial services without requiring any more information about the customers than what they already have on file. So if you're a small business, you run your online web shop through a software company, that software company probably knows you very well and is able to give you decisions immediately, even before you know you need to finance yourself. So I think on the onboarding side, the development of open APIs and the development of vertical-specific software is enabling a new type of company to offer financing to small businesses and bridge those gaps that we talked about before.
And what role does embedded finance play in this whole context?
So embedded finance is a driver for access to finance for small businesses. You're beginning to see some infrastructure players who don't really engage directly with small businesses, but who deliver software to other companies. And that's what enables these non-traditional finance players to actually offer finance.
And can you tell us a bit more about Uland services? How do you meet the SMEs' needs in this matter? What do you do better than banks?
Of course. So Youlend, we're an embedded finance provider. We partner with payment companies, with tech companies, with banks to help small businesses access finance where they couldn't otherwise do so. What we try and do at Youlend is to deliver financing through APIs and never in our own brand, and we do so instantly, same day. For us, it's important to expand our eligibility criteria, look at leading indicators of whether small businesses will do well, so that we can say yes to as many as possible. It's important for us to make the application process smooth and work with our partners to do so. And then finally, it's important for us to be fair and transparent in our terms so that we can do what most modern companies want to do, which is treat their customers well.